Get to the pre-opening rates, by the way, you have a lot of stocks actually. Put your focus on, say, an IndusInd Bank, Persistent Systems. Persistent Systems is in the green at the moment on the back of a good set of numbers. IndusInd Bank is down about 4.5%. And you have something like an Adani Enterprises on the back of that FPO that is sulking a bit because perhaps of the floor price being around 3,100 or so. But let's move on. The government's increased thrust on infrastructure development is likely to come as a shot in the arm for capital goods engineering companies. Harshit Kapadia, the Vice President, Industrial, Consumer Durables and Electricals and Renewables. So he's tracking a lot of the buzzing sectors. He's from Elara Capital. He joins us now. Harshit, good morning and thanks for joining in. I was going through your recent note on capital goods and you point out that this is the highest order inflow that the sector has seen in the last 8 years. Across most companies, Siemens, KEC, Kalpataru Power, large orders are being booked. So tell us, from an investor standpoint, where do you see the maximum growth, both in terms of price appreciation as well as valuation headroom?
So morning, Sonia. So in terms of growth, we are seeing a lot of new sectors rising, and the capex in terms of large quantities being started to flow. Let's say starting from railway as a sector, moving on to even renewables and defense as well. So those are the key sectors that we are looking in terms of where more order inflows are expected, given the government is very aggressive in these three sectors. And in terms of valuation, there is further room for valuation upgradation as your order book is going to an all-time high. Further, there is a scope of increasing, and everybody is getting a pie of it because the project size are also increasing and more number of projects are coming.
Hi Harshit, good morning. Harshit, just wanted to focus on Havells for a bit. The numbers are expected today. What are you penciling in?
So I'm penciling in something like a 10% kind of a growth for Havells. We are certainly looking at on a Q1Q basis margin expansion, given one of the segment called as cable and wires is looking to see a strong expansion in margins, given the material prices have been stable, so that should help them get back to a higher margin. And there have been some price hike within the sector, as within some of the segment which Havells is operating.
Okay, you have buys on a lot of these, defense names as well. There is, I'm just going through your list. There's Bharat Electronics, Bharat Dynamics, Hindustan Aeronautics, Garden Reach Shipbuilders. Tell us about what kind of upsides do you see here, and how much of the order wins, the good news is already in the price?
So in terms of upside for most of the players is about 20%. The largest one is in Hindustan Aeronautics. Part of it has been priced in terms of what domestically is expected, but most of the orders on the export side is something that we are expecting should come in 1 to 2 years time frame. So that should help them further re-rate the sector. Apart from that, there are a lot of programs on the indigenization side, which will also have benefit to PSUs as well as private sector, which is also further going to help order inflows momentum to continue in the defense side.
Names like Voltas, do you have any view?
So presently, as far as consumer durable is concerned as a sector, right now the demand has been quite weak as far as EC is concerned, or the other consumer durable is concerned. So presently, we have a hold rating on Voltas, but Q4 onwards, when the summer season starts, picking up, one can look at Voltas, and that's where the demand is expected to revive, and the price hike may also happen, where most of the players are struggling in the market.
Harshit, briefly we talked about Siemens. Now, are valuations a problem? I mean, Siemens now trades at what, 55, 56 times earnings. If you just go back and look at where valuations were 2 years ago, right? Actually, look at in the middle of 2019 before COVID, right? There's been a huge re-rating. Irrespective of what is it pricing in, basically, is the question.
So largely the capex, which is being, so if you look at post-COVID, the capex cycle has improved significantly, and that has been the key reason. And Siemens has a larger exposure across multiple sectors, So the growth momentum is going to continue, whether it be power, be it be real estate, be it be railways, the major sectors or the manufacturing sector. So all the sectors are very much aligned to Siemens, and a recent announcement of Siemens getting much bigger on railway should help them get more pie of what the railway capex is right now giving.
Okay. You have reduced your exposure on BEML. Why is that? Is it purely because of the amount of price appreciation that you've seen? And what are the triggers there?
So the reason we have a reduced rating is because we saw the order inflow momentum for BML being slowed largely on the metro side. So some order which were expected, which where Alstom has actually got some orders. So there has been metro is moving on a slower track, whereas defense is still continuing the momentum it is. So the trajectory was more towards metro. Hence we have a reduced rating on BML. But once the disinvestment news also, revised, there could be a chance of re-rating. So disinvestment is also another reason where things are moving on a slower track.
Okay, all right, Harshit, thanks so much for stopping by and filling us in with your take on the space, as well as a couple of stocks as well that we discussed. Disclosures come up for you on the screen. But it's 9:10, so let's get in our technical expert.